So I'll begin. And what is the outline for today? So relative strength, what is it? Why does it matter? The rating versus the line, that's a question that we get a lot. What matters more in my perspective? I'll present that and my thoughts. What to watch for? So RS new high before price. What does that mean? What does that look like? What is group RS? How does that fit into the picture? And a form of RS being down less than the market, which we actually saw last week, followed by tools because people want scripts. They want to visualize it. So we have a TradingView script, and then I'll sort of actually get into the details of what DeepView will have as well, just to give you guys an idea of what we're trying to do with that platform and tool. There'll be homework. So we'll start a study on the forum on building a model book for relative strength. And I've built a post. I'll post it as soon as this webinar is over so that people don't get confused. And then we'll have a live Q&A session if you have any questions from my presentation here. So what is relative strength? So relative strength is basically a calculation where you're taking a price of the stock itself and you divide it by the index price. Now the index, so it's very important to understand the calculation. When we see people say that something doesn't work, we often hear this, that, oh, this doesn't work. I believe all indicators work if you get the essence of why and how they're being calculated. So for example, I can master MACD, and one of my early mentors actually taught me MACD, where he said a MACD cross above the zero line is how you find strong stocks, and the MACD cross below the zero line is how you find weak stocks in the market. And that still works today. To date, that works. So it's a matter of understanding what the indicator is trying to portray, what kind of time frame it works on, and what kind of time frame it doesn't work on. So when we say something doesn't work, it's out of lack of knowledge and research of how that particular indicator is being calculated. It comes across as not being knowledgeable enough to make a judgment on it. So we just say it doesn't work to make ourselves feel better. That's just how humans are in general. So understand the calculation of this applies to any indicator, anything that you're doing in the markets. If you don't understand how it's being calculated, last week we talked about batting average, average profit ratio, average winner, average loser, and dollar amounts. And if you're not calculating those manually first to gain an understanding, then you don't really know what you're looking at. So calculation of RS is always fairly simple. It's the price of the stock divided by the price of the index. Most times it's always calculated on a closing basis. So when we're intraday in the session, this is the last price. And the price of the index, you can do that versus the S&P, NASDAQ. Some people do it versus the Russell. Whatever market that you're trading, you want to benchmark it against that market. Most people tend to stick to this. Given recent market volatility, if you're comparing a growth stock on a relative basis, it may be better to be doing this because S&P is holding up because the oil names are actually, trying to perform. That's a component of the S&P. While as NASDAQ, it's 100 stocks that are more geared towards beta, geared towards growth in the markets. So that's the calculation. You have to understand that, and then sort of, even price it out manually if you want to do that on a spreadsheet. Just, a 1 or 2 time exercise so that you really understand what you're looking at in the markets. What does it show? It shows us outperformance, and it shows us an institutional bid. So for example, we have a price of a stock, and then let's say we have our RS line up here, and RS is rising even though the price is declining. That means that that stock is sort of out, it's trying to hold up, but the market pressure is pushing it down a little bit, but not enough when we compare it to the index. So the index might be down 3%. And if the stock is down 1.5%, that's relative outperformance versus the index. Now, a few things that I want to make clear is that RS is not a signal. It doesn't mean that you see RS and you go buy stock in the middle of nowhere. It's information. it tells you that there's some sort of bid on that stock, but we still have to wait for a setup. And how do we define a setup? We have three components. We have entry tactics, we have edges, and we have position sizing. So those three components make a setup. So if a stock is showing RS, that is just one part of it. RS is an edge, right? That's 1 out of 3. Now you have to figure out what entry tactic you're going to use to minimize your risk, and how will you position size it. That is almost always dependent on your last 10 trades or 5 trades, market environment, and how things are going in the market itself. So to think that you can take RS, make it the only thing you look at, and take actions off of that, which is basically a signal, a bullish signal or a bearish signal, that is not the right way to be going about it. It's just a piece of the puzzle. It's information that we're getting, and we still need to figure out the other. So number 3 and number 1 of that puzzle, right? Relative strength does not yield an automatic winner. So what happens is we often see, especially in this market, a stock might hold up for several sessions, but the market continues, the pressure on the market is so high that the stock eventually sort of caves in and doesn't really have a choice. It just caves into all that pressure. And we see that, oh, the stock was showing RS, but now it's just getting decimated. That's more to do with market backdrop. Things can only hold for so long until they can outperform. If the market continues to pull in, continues to put pressure, then the M factor is the biggest factor in the markets, and nothing sort of can stand or withstand that pressure for multiple weeks to months. So it doesn't yield an automatic winner. It's not a holy grail. It's, again, a piece of the puzzle. Stocks that exhibit RS, so that I already discussed. And then it's designed to capture larger trends. So you'll always see, depending on the time frame that you function in the markets, you'll see day traders, again, say that it doesn't work. It doesn't work for their time frame. The point of RS is to see relative strength over a period of, let's say, 10 days, 12 days, and when we're in a correction, a period of multiple months at a time. And the RS line will continue to show that this stock is trying to outperform the markets, but the markets are not cooperative yet. So relative strength is designed to capture larger trends. It's not a tool that you could use on a 5-minute chart and try to get away with it. So it always depends when we're using indicators. It depends on time frame. It depends on goal, and also having an understanding of the calculation and what we're trying to do, why we're trying to plot it on our charts. So any questions on that? I'll take them as we go. And so there's a question on CF. We'll get to individual stocks later, so I'll continue for now. So let's talk about the RS line versus the rating. So I'll move that here. So the line is a roadmap of how an individual stock is performing. So when we take the price of the stock and divide it by the price of the index, that's a roadmap for the individual stock and how it's performing. So that might be to the upside. We might have a few down sessions, or the stock might be completely in a downtrend and the RS line will continue to go down. The rating itself, what it does is it compares the IBD rating that everybody's fascinated by. It takes a stock and it compares it to all other stocks in its database, and it comes back with the rating saying that a rating of 99 means it's outperforming 99% of all other stocks in their database. Now, it can sort of get skewed, and which a lot of people have seen is on a 12-month basis, it tends to get skewed. Something that's down 50% from the highs can still have a rating of 50% from the highs can still have a rating of 99. That's because the stock went up 300%, and you'll probably have seen examples of UPST floating around. And that is usually used as a thesis that relative strength doesn't work. You probably just don't want to look at it. So the rating, I don't tend to use the rating in my analysis. I stick to the RS line. I'm more interested in the individual roadmap of how the stock is performing with respect to the market, rather than how it's performing on a relative basis with respect, comparing it to other stocks, because you can have these winners of 300%, that can come down 60% and still be, the creme de la creme with respect to performance. They can have a RS rating of 999. With respect to the RS line itself, I'm looking at the slope. So if we're trending upwards, that means the stock is consistently outperforming the markets. I'm looking at the direction. So if on a net basis, it's choppy, but it's still going up, that means the stock is continuing to outperform. And then there are two variants of this basically out there. One that I picked up from Dr. Eric Vish. He places a moving average. And this is also something that Richard brought up as well. He places a moving average, a 20 EMA, I believe, on the RS line. And if the RS line is above that moving average, then the slope or the direction is it's in a RS phase. Whereas if the RS line is below a moving average, it's underperforming the markets on a 20-day basis. I feel that's a really good way to look at it, especially in corrections. It's a really good way to look at it, and something that you guys should study individually to incorporate it into your trading. There's another calculation that Matt Caruso has, and that's called the adaptive relative strength. That is basically based on, it's a beta calculation to calculate alpha. And what it basically says is if the market is down, for example, 3%, and the beta of the stock is 1.5 times, or let's just say 2 times to keep it simple, then you expect the stock with the beta of 2 times to be down 6%. If that stock is not down 6%, let's say it's down 2.5%, that's on a relative basis, it's outperforming based on this beta calculation. So that's another way of looking at it, and we'll cover that later in this webinar as well. It's basically a way of saying it. For example, on Tuesday or Wednesday this week, the market opened down 1.5%, but net and crowd were positive on the session. Based on that beta calculation, we expect if the NASDAQ is down 2%, we expect growth stocks to at least be down a little bit more than the market, because that's how growth stocks trade. They have a beta of greater than 1. Now, when they don't do that and they're down less than the index, that shows you that there's a bid on those stocks on an individual basis. And that's basically the essence of what this beta and alpha calculation, or this adaptive relative strength, is. It's a neat way to look at it. I agree with part of the calculation. I do disagree that we should not expect, if the index is up 3%, we should not expect a stock with a beta of 2 to be up 6%. I think that's sort of the weakness of this particular calculation, but that's something I'm still studying, and I will only incorporate it when I feel I'm confident in it. So I would say keep it simple to start with. People tend to get fancy and want to incorporate all these things at once. They want to use the rating, they want to use the line, the moving average, they want to adapt it somehow, and they like to follow what they're being told instead of starting it from the grassroots and then developing their own understanding of what they're being told to look at. So start with the RS line, look at it on a historical basis, look at the winners, then maybe throw a moving average on there, look at it again, so that you build layers of foundation and layers of confidence as you build conviction in relative strength as a whole. Don't go out there and say, Dr. Eric Wish told me and Matt Caruso told me. It doesn't matter what they told you. It's for you to function in the markets and for you to position size in the markets. What you have to do is take those calculations in, internalize them to your own system, and then that's the only way you can build conviction in them. I almost never do what I'm being told. If I do see a concept that I like, I go and study it. I build my own conviction in it, and then I use it in my trading. I don't go around completely just blindly following anybody for anything that they say in the markets. So I feel that's important, and that's mostly what self-leadership is. The other thing to watch for is relative strength new high. So this one is fairly standard. So if the RS line is making a new high, now those highs can be on a 3-month basis, 6-month basis, 12-month, and all-time highs. What does it tell you? What does RS new high tell you? That the stock, there's something happening in the stock, that it's outperforming the markets or continues to outperform the markets. And that's something you probably do want to look at on a consistent basis. You'll see a lot of stocks that make the new highs screen. If they don't confirm RS new high, that's sort of a yellow flag on them. But if a stock is making an RS new high and is on your new high screen, that's usually a good recipe to say this particular stock is outperforming. And then if there are many stocks in that group, you could say that that group as a whole is outperforming. And that group right now is oil and gas names in the market as of March 2022. The other one, this is RS new high before price. We'll get into examples later on in this webinar. This is a concept by Ross. Basically, what it says is that the price of the stock, for example, we've declined and we're in a correction, and the RS line continues to scream higher. So the stock is going down, but it's trying to buck the market trend as best as it can. This is another form of, you could call this adaptive. You'll see the signal where the beta of the stock says it's supposed, if market's in a 30% correction, it's supposed to be down 60%, but it's only down, let's say 22%. So what happens is it skews the RS line to the upside. And when this happens on a consistent basis, if price is trading somewhere over here and it hasn't caught up to this particular high, so the relative strength line is making new highs, but the price is not making new highs. So this particular characteristic showed up a lot in 2022, 2018, and there are a slew of other corrections. If you go back to 2015, 2012, even 2009, if you want to take that, this particular characteristic tends to show up a lot. So what tends to happen is when the market pressure is lifting, the stock price catches up to this particular high, and that's why this particular, this RS new high BP is sort of a thing to look for in the markets. We'll keep going with what are RS phases and RS days. So when relative strength is above this is the Dr. Eric Wish concept. If RS is above that 20 EMA, the stock is basically, we can say, is in an RS phase, and the RS phase ends when the stock breaks below the RS moving average of 20-day. It's a fairly simple concept. We'll have the TradingView script up to sort of visualize it as once I finish this presentation. And then the other one I want to talk about is RS days. So this particular concept is fairly simple. What I'm trying to do with this is when the market enters correction, that date sort of becomes the date that the market went into correction. I want to see on a per stock basis, how many days did a stock try to outperform the market in a corrective phase? If a stock did that for a span of, say, 62% of the time or 65% of the time it was trying to outperform the markets, then that is a stock I want to know about. On average, we had about 60 to 65%. Many winners in 2020, 2018, and 2015 when the market was in corrections, or January 2018, we had an early correction. When stocks meet, the threshold, if they're outperforming 60 to 65% of the time, what happens is they tend to be the biggest winners in the market once the market pressure lifts. So with respect to this particular concept, I still use the IBD definition of market coming off 10% off the highs. I don't use the BP methodology because I feel the BP methodology needs a little bit more work to reduce noise, so that we don't reclaim for one day and then we stay below it for another 12 days, which we've had recently, and it's a weakness I'm very aware of. But as it improves over time, or if I can improve it over time, then I may switch over to the BP calculation. So the gist of this is the stocks that outperform the most on an individual day basis while the market's in correction, those are the stocks that will outperform when the market pressure lifts. And that is what I've seen in the numbers when I've gone back and studied different corrections and the biggest winners out of those corrections. So the last bit of it is group RS. So when we have multiple stocks in the same group showing RS, so we could say, for example, right now, Oilers, right? They continue to outperform the markets. There's a backdrop of war, shortages, inflation, what have you, that's driving that price higher. So we see group RS. We saw semis try to do that before we entered back into a corrective phase in the markets. So semis were a potential leadership group because there were many semi stocks exhibiting RS. So this is a form that is sort of a cherry on the top. This stat by William O'Neill is that this is something that actually I do want to study and sort of confirm if it applies to current markets. But for now, we could borrow the stat of 37% of the stock's move is related to its industry and group. So that sort of becomes an important factor. You want the group strength to be behind you for the stock that you're in so that you can get added alpha out of that stock. The last bit of it, every time we notice down less than the market, we call this decoupling, right? People call it adaptive RS, whatever you want to call it. This is one of the things that we see right near the bottom of a correction. What happens is stocks tend to stop going down. There's enough demand by institutions, and we start to see stocks sort of act on their own merit, and they don't listen to what the market. If the market's down 2% and a growth, like a growth stock is only down 1%, this is what happens in a bottoming formation in the markets. So we look for decoupling. That's a form of RS when stocks act on their own merit and the RS lines on many stocks as a whole starts rising. This eventually shows up in RS new high and RS new high before price. And we try to track it pretty much on a daily basis when we say, is there decoupling in the markets? So those are things to be watching for. So now we have a trader line TradingView script, which has, it plots the RS line for you. And you could go check it out on tradingview.com and then search for trader line. We recently added a moving average on top of it. And you could sort of view the 20, you could plot the 20 EMA on the RS line and see if it's in RS phase or it's not in the RS phase. DeepView itself will have the capability for you to scan RS new highs, RS new high before price, RS phase, and RS days. So I've been working on those myself in the background. So when I'm not interacting with you guys, it's basically working on the platform. With respect to homework, study market corrections. So I'll be posting this on the forum as well. I have a post up on my other screen. So as soon as this webinar is complete, what we could do is maybe folks, 2 to 3 people can work on 2018 correction. Different folks can work on different corrections. And we can build out a sort of a model book of what RS is so that you guys can build your conviction in it. Is it something that actually works? You have to prove it to yourself. You could become a subject matter expert. You could, once you build that conviction, you could trade off of it. It's it's one piece of the puzzle that if you master it, it will bleed into greater position sizing. And when you see your entry tactic in the markets, you can pile into that particular name, and that's what it will yield performance in the long run. So with that, we'll start taking questions, and I'll also bring up the trader line, this script. So you can add this, the TLRS line, which is basically on TradingView. If you do use TradingView, you could sort of play around with that. Looks like we have to upgrade our account, but with that, I'll be happy to take any questions that you have specific to relative strength. So one of the first questions is, I remember last webinar you mentioned a stock like CF was not your trading style. However, could you explain why in more detail? So let's, yeah, sure. Let's pull up CF on the screen. So this particular stock, okay, so we're in an RS phase. It just, on a historical basis, it just trades in a way where it either, goes up when the backdrop is good, or it could go into these larger bases and be, hibernate for a very long time. So the reason for that is the action on it is very dependent. It's very dependent on external factors and market backdrops, including news. So I don't tend to get, for me and my system that I have in the markets, RS is a piece of the puzzle, but I need an entry tactic to get into this name. And what these names tend to do is we have a high of 77 and a low of 67. Maybe it tightens up for a few sessions, but it doesn't trade within my entry tactics. So I have a tough time trying to tackle these names. Now, the question might be, why aren't we in this winter? It's working. It's working now. If I look at my performance on a 5-year horizon, the amount of money I've made on CF is probably net near zero or negative. So I'm trying to minimize my mistakes in the market, not try to do what's working, because I know I'll eventually bite the dust in something that I don't have conviction in, or I know I haven't traded well in the past. So yes, you can be fancy and get into these names. There's nothing wrong with that, with doing that. For me, I just feel like if I catch something like a UPST that can double and double again in a very short span of time, and it's trading on its own merit, the company itself, or it's innovating, like something like Cloudflare and ET, or not, it doesn't even have to be the technology space, something that just trades clean, like LNTH recently, to trade it from 40 to 53. Those are type of stocks, that ones that fit my entry tactic, is what I'm trying to do more of. I'm not trying to be right. I'm just trying to minimize my mistakes and have conviction in stocks that trade with clean action and have the edges entry tactics, so that I can position size them well in the markets. So that goes for, any gold names. When I started out trading, I would trade gold. Yes, okay, gold is working, but you had to sort of survive this 33 to 28, which is a fairly large drawdown with respect to miners. They only tend to move 2 to 4%. Maybe the smaller ones move 8 to 10% with beta, but this market, it could change overnight. You get gapped down on, you get, sort of kicked in the balls, and then it keeps going. That's sort of been my experience with it. So I tend to avoid it. Question on, how do you scan for stocks exhibiting RS days? At the moment, I have a personalized database. There's nothing really with respect to a product out there that does this. So our goal is to sort of incorporate that in our product, which will be DeepView. At the moment, what you could do, the ways you can scan for RS is either through TC2000. You could do a ratio. But I tend to just look at up on volume screen and sort of do that manually. I'm not scanning for exactly RS days, because there's nothing that sort of gives me, like, spits out a list for me at the moment. Do you count RS days anytime a stock outperforms index on day, or only? So RS days are when market starts a correction. So the market has to be in correction, and then within that correction, from 10% off the highs to the follow through day, which is the confirmed uptrend, the calculations made in that time slot. And RS days are basically every time a stock outperforms within that corrective phase. So if the stock is up more than the market, or the stock is down less than the market, those both are types of RS days. You do a calculation on those, you add those up, and you say 60% of the time the stock was trying to outperform while the market was in correction. So I hope that answers your question. How do you scan? So again, Nicola, I would love to just have things just, I scan the market and I have a focus list and things are beautiful and I have to do nothing. Uh, I, you look for these things. I feel this is not something that you want to, try to automate or be a robot about. You'll see a lot of stocks in the semi space, medical space, oilers, miners that start to go up and they hit your up on volume scan. They hit the HDF watch list. They hit the gappers watch list. So that's how you sort of become aware of it. It's not something you just scan for it and things just happen. But it would be, yes, it would be nice to have that capability. At the moment, you can look at the IBD ranking system. That tends to be a way that they have a ranking system that sort of incorporates RS or group RS. That is one way to go about it. You can look at the performance momentum charts. If the market is down in the week, what is down the least, right? We post those market performance momentum charts from an industry perspective daily. So that could be a way to track group RS. But I don't know of a scan that just will spit it out for me without doing homework. Will you make those scripts? No, we won't make those scripts in TC2000. We just don't have the resources. Our focus is going to be TradingView and DeepView. We're actually going to be using TradingView's charts in our application. So we're actually making all of these scripts, which will then be incorporated into our own platform, which will use the TradingView charting library. Did the updated, we have a separate script actually that plots the SPX, Justin. So the question is, did updated TradingView RS line script remove the option of plotting SPX line itself? That's a separate script. So I believe if you go to the trader line profile and click scripts, there are two separate scripts that you can combine. There's a question by Alan. When searching for RS among individual stocks, how do you interpret stocks showing RS increase before a market rebound, then rally? I don't think I quite understand your question, to be honest. We look for, so how do you know a stock is trying to outperform? It could have a RS new high. It could have RS new high before price. It can show, the group can be showing RS. So all of these things, guys, no scan is going to just do all your homework for you. These are things to look for while you're, when we're doing the gapper scan or IPO scan or going through the HDF watch list. I feel like people in here feel that if they have some sort of secret sauce scan, they can just, be the kings of the market. That's just not how things work. You still have to go through stocks and sort of look for these characteristics and come up with a conclusion that these things are happening in the markets. That's the best way to do it. If I had a scan, if I had a scan do all this, maybe I may not get the complete picture. I would still go through all, the NASDAQ, S&P 500 and sort of get a feel for the markets. I think that can't be replaced by a scan, even though people feel they can, they just want to scan for it and not do anything else. It's awesome, but it doesn't build conviction, in my opinion. During the current market correction, when scanning for RS lists, do you eliminate certain groups and stick to growth stocks? How do you, okay, right. So I don't tend to eliminate. I'm very aware that oilers, gold, oilers, gold, food, stocks, anything that is non-growth is really working right now. So I am really aware of these groups going up at the moment. My concern is that my current entry tactics just can't capture these sort of moves in the market from these groups. They tend to work maybe for 1 to 2, maybe months. In those times, I'm not trying to force myself upon the market. I'm trying to wait for when the market trades in my wheelhouse. so that I can easily catch up with 1 to 2 weeks of good performance and a broader participation in the markets. I can tally up 20% just like that. When we see, you know, a rally from 4,100 to 4,300, I can sense that and see. So I wait for my time to sort of pounce on the markets. I'm not forcing myself, oh, now I have to trade oilers. Oh, now I have to trade gold, or now I have to trade a food packaging name that's going to move 3% while the market may move 4%. So it all boils down to what your goal is. Do you want to be right in the now, or do you want to be performing over a span of 3 to 5 to 7 years? So it's more a mindset thing. Yes, there's nothing wrong with trading these if you have something that can consistently tell you, but there's so many other factors with respect to news, CPIs, numbers, reports, and commentary, and Fed, and all those things combined in this crap, you know, the Oilers and gold space, that it becomes, it's not worth burning my brain cells for it. At least that's how I feel. I started in these, you know, I used to, back when I started trading 12 years ago, I started with Oilers and gold and lost a good bit of money. So I learned my lesson. Maybe things have changed, maybe they've not. I'm not trying to be stubborn and say I'll never trade them, but it's a matter of the amount of effort you put in and what gain you get out of it. It matters much more to me than trying to be right and say, see, I'm long 5 Oilers. And the next day they get gapped down on, and now I have to look at news and things of that nature. So it's a matter of, you know, picking and choosing your spots to perform in the markets. Do you look for stocks decoupling within the TL watch list to evaluate? Yes. So we during the market week, so during when the market's open, we have 3 watch lists, which is the HDF, IPO, and the gappers. And usually these watch lists are built to tap into market structure, and they will tell you when it's go time on a broad basis. So right now, commodity related stocks are the hottest stocks on the market. You'll have, you know, corn features and orange juice and all these things, you know, they're ripping higher. But when it's time for the broader market to rally, these 3 watch lists will capture that fairly quickly. And these are ones that I stick to during the market. If the RS line, yes, that is correct. So if the RS line shows blue for a day, is that day counted as a RS day? That's exactly it. So these would be RS days right here. But I think there's a setting on here that you can switch to the candlestick view to sort of give you a better picture. So I would use the candlestick view, but I think measuring RS days, that's something that may, you know, be helpful to have a scan spit out and sort of rank for us. That's something that we're working on, or I'm working on with DeepView. So we'll have that someday. How do you react to a stock with RS that has RS in the correction, but after market pressure lifted, the RS trend sideways or downwards for some days? How do you consider it as RS? So yeah, that's the typical question of, this is why RS doesn't work. So it's all dependent on the market backdrop. So if you think, or if you want a stock, or if you want an indicator in the market that gives you a guarantee that it will work no matter what, you will never find it, or at least I haven't found it. But if you do, you can let me know, and I'll be more than happy to promote that indicator and say it works 100% of the time. Why are we wasting our time looking at all this? So let's, for example, take this area. This is just an example. You could go back to 2015, 18, 12, any correction you want. It tends to happen often as markets are coming out of correct. So if a stock, let me know if you guys see my screen clearly. So if a stock has come down and is now down less than the market. So on a net basis, this is where we hit the RS new high before price. So at this point in time, when the market was in correction, this stock was sort of outperforming right in this area. And I'm not even making that up. That's just where it is on the chart. Now it starts going sideways, and there's a chance that in this area, maybe the market was going higher and this stock was not participating, right? So what we can do is we could, we're looking at it once RS is an edge. So once we come to a fact that a setup is made of entry tactics, edges, and position sizing. There are three components to a setup, right? RS is an edge. That's one out of three components. So that's 33% of your setup. Now, if you have multiple edges, then your position sizing increases, but you need this piece of the puzzle. So if you get involved right in this area, or you get involved through this pivot area, right? Again, what is a pivot? A pivot is a point on the chart where you expect directional movement to the upside or the downside. So if you pick a pivot on this stock consistently in the market, so pivots are supposed to be defined consistently. If you pick a random ass pivot right here and you get chopped around, well, the way you're picking pivots is incorrect, right? The way you were expecting directional movement at this point, for example, that is not happening. Maybe it's easier to pick it off here. It breaks out and then it goes up and out. So when a stock is showing RS, it's showing a edge, or it's saying that you can, RS is an edge in the markets, but you still have to combine that with your entry tactic. It's showing RS new high, time to put my whole account in it with no stops because it has to work. So that mentality of something where you feel that something has to work for you, or has to be correct 100% of the time, there's no such thing like that in the markets. And I hope I answered that, or I hope it makes sense, where it's a piece of the puzzle. Yes, if a stock just fails, if that's happening 80% of the time, or if that's happening 90% of the time, then RS is not an edge you want to look at in the markets. But if it's happening 20% of the time where they just fail, and 80% of the time where they work, or 55% of the time they work and 45% of the time they don't work, that's still an edge over a series of trades, right? That comes more down to thought, your thought process in the markets than saying, oh, I had this one stock, it exhibited. Actually, let's pick an example just to drive point home. You guys should read Mark Douglas's book. I think it's one of the best that covers a mindset of having a series of trades, not just if something doesn't work once, it doesn't work forever mentality. So this, we can say, I even had a note on it that on this particular day, the stock exhibited RS or somewhere in this area where the market or the NASDAQ was down 3%. And the stock was sort of flat on the session or trying to rally. So this was where it exhibited RS. We entered the stock, where I entered the stock right around here, sold it into strength because the market backdrop wasn't improving. Now, just because it exhibited RS in this, I can't be a deer in the headlights and say, exhibited RS at 55, no matter what, over the next 2 months, I'm going to be holding this. That's just not how things work. So that's only a piece of the puzzle. It's an edge. And then we need an entry tactic, and we need to position size it to make a setup and make an income out of that setup in the markets. So I hope that answers it, or answers your question, MRJ. Does it complicate things to change comparison from S&P to QQQ or a semi to a SMH? I think a comparison to the group itself is rather it's a layer that you can use to find the top stocks in that particular group. That doesn't mean a stock that is a top stock in its group is going to be the top stock in the market, right? Those two things are two different things. So if you're comparing AMD to SMH, AMD might be the top stock within the SMH on a relative basis, but that doesn't mean that AMD is the top stock in the market, right? Now, if you compare AMD to S&P 500 and it's outperforming, now on with relative, to 500 symbols that the S&P calculations based on, it's outperforming that index or a basket of stocks. It's outperforming a basket of stocks. Now that's a little bit more, better info. Now, if you combine those two things, it's the top stock versus the index, and it's a top stock in that group. Now you own a winner, because you can have the M factor behind you, which is 50% of a stock's move, and you can have a group factor behind you, which is 37%. So 87% of a stock's move is based on those two parameters in the market. So Justin, that's how I would sort of process that or look at it. It could be a top stock in a group, doesn't mean it's going to be a top stock in the market. The second part of your question was if we compare from S&P to the NASDAQ. That's something I'm still debating. I don't have a good answer for you on that. Personally, for now, I just use S&P 500. I've seen people use NASDAQ, but I feel S&P is sort of the sane child in the middle of things, whereas it's surrounded by a crazy NASDAQ and a crazy Russell, because they just have higher betas back and forth. So S&P is still that index with respect to the amount of money invested to it into the S&P 500 on a global basis. It's still the biggest index, and there's a lot of ETFs, variant things that track it, and other derivatives of that product that are all tied to that S&P 500, where I feel it's still the top index. Now, if you talk to Mike Webster, he says, you're crazy, just use the NASDAQ. So it all depends on your opinion of it. I feel, the biggest money is associated with S&P 500, but I sure as hell wouldn't argue with someone like Mike Webster. So he uses NASDAQ, just to give you a reference point. When looking at the TL IPO watch list, how do you interpret or consider RS, or is it a less of a factor? So I would say go watch the last 2 daily recaps, Tony. I've gone through those watch lists and commented on the stocks one by one. I went through Gappers, IPO, and HDF, and you'll see exactly what I'm doing on a daily basis to sort of what things am I looking at? Am I looking at entry tactics? Am I looking at, I'll even point out RS. So rather than answer your question here, I think the daily recaps that were posted on TL Private will tell you. We'll give you the answer to that. So a question by Andy: is RS only used with the S&P 500 and not NASDAQ? Is there a way to use NASDAQ in a relative strength line? Yes, you can use NASDAQ in the relative strength line. And then it all comes down to you actually studying it. So you can plot it versus IXIC, which is the NASDAQ composite. And you could do that in TradingView if you want. The important part here is just have conviction, go back and study it versus the NASDAQ, so that you're not just following like a lot of traders just are zombies. Someone tells them what to do, they just run that way. Everybody runs that way. They tell them run this way, they run this way. There's no self leadership or taking things internally, internalizing them, researching them on your own to build your own conviction. So please study it for yourself and come to that conclusion. For me, I use S&P 500, and I haven't studied it. I haven't studied it, the RS line versus NASDAQ enough to come out and say that we should only use NASDAQ at the moment. I just realized LNTH has 7 RS new high before its gap up. Is that what gives you conviction to take the trade? With LNTH, we can discuss LNTH. So this particular volume, I don't have the volume up because our TradingView account's not been paid for some reason. But so first it opened above 35, and then it opened in the wick and respected 40. And the volume down here was HV1. So this is an edge. Now it already exhibited RS. So you combine now. So you have two edges, right? You have an entry tactic. Entry tactic was 40 respect, right? And this was covered in the daily recap video. So two recaps ago, if you go watch this, we covered this exact setup. So that's one piece of the puzzle. That's two pieces of the puzzle. Now position size is dependent on the number of edges that you have, right? You have two. So maybe you can position size this at 12 to 14% if you're in consistency phase. I tried to position size this at 35 to 40% because I've seen this setup enough times that it's clockwork at this point, where I can put this percentage of my account in it and really manage it versus 40. What happened in this case for me was I got a partial fill, which was 1/3, which was pretty much a 12% position, I believe. And I just sold it into strength because I either want, a full position that's going to make me a lot of money while I'm at the desk, and not just, show off a percentage that, oh, look, I own a stock that's up 30%, but I only have 12% position size. And that's just personally not worth my time to be at the desk and looking at it all the time. So, okay, we'll move on. Are there any other questions that you'd like me to answer? Please raise your hand. Yep. Roberto, you could go ahead.
Hey, Ray, can you show the setup where you were sizing 35%?
So when we're reviewing our watch list, so this stock makes it, so did you guys see my screen? Let me know. So this stock is HV1 and makes it to the TL Gappers watch list, right? So one of the setups is, this is the HVC area, right? The high volume close area. This is the wick that the stock created. So if it trades in the wick, that's a sign of strength. And if you take a look at the low on this day, I basically had 40 in HVC marked down. So this is homework being done when the market is closed. There's no price movement. You plan it coming into the session. So price comes in, and if you take a look at the low on this day, the low is 40.21. So I basically bought stock 40.25, 30, 35, or I tried to, and it gave me one out of those three fills because what I want to see is 40.21. I buy stock, and my stops are at 39.95. At that point, my risk is fairly minimal, and the stock is already, we know these are known facts. Exhibited RS prior to gap up. HV1. The market's closed at this point. I want to emphasize that because a lot of people feel like you're making this up on the fly, or these are things when you're doing your homework on this day when the market's closed. So based on those facts, you can come into the session and you can say, okay, if this stock comes back in, hold 40, goes up and into the wick and even out, you sort of box it in, top side, bottom side, define your risk. And then if that setup triggers, you take the trade and you size it up. So I had pretty much 40.25, 40.35, and sort of 40.40 orders placed on this. It triggered one of my orders, but then it never filled me on this for some odd reason. So one of the things I learned from Minervini is you want to buy when the stock is on its way up again, so that it's much easier to manage. Not when it's coming down, you buy at 40.20, 40.10, 40.40, and then it breaks it. Now you have to sell all three of these because your thesis is invalidated. So that's pretty much how I approached this particular trade. Any follow-ups to that? Thanks. Okay, awesome. Thanks, Robert. Do you only use limit order? No, I don't. I tend to use market, but in this case, I did use limit orders. So I sort of had them all set up. Once I knew, the stock opened down, I could see it, and I sort of had shares lined up. But then for some reason, it never filled me. So on a net basis, I would say I use more market orders than limit orders. Ross says if you don't have enough conviction, you use limit orders as an excuse. Ross always uses market orders. So when he's buying, he's buying at the market, whatever the ask is. How do you get to the daily recap? It's posted on the TL private feed. We will get them on the websites eventually. So we're about 1 hour into this session. Any last questions? I do want to keep it to an hour and respect people's time. So if any other questions, you can either unmute yourself and ask them or post them in the Q&A. Okay, it looks like we don't have any questions. So I'll wrap it up there. One last thing for this, well, the announcement on Jared's webinar will be out shortly. There is a members code that you could use at the moment. I think the code is going to trip itself when spots fill at the discounted rate. Just want to point out this fella charges $450 an hour for consultations, and we've pretty much put a deal in place at $149 for 5 sessions, which will span for 2 hours each. So I hope this is a no-brainer. It will be focused on psychology or trading psychology. It will give us a full framework to operate on from a psychological standpoint so that we could boost our performance in the markets. So if you feel that you need to work on your psychology side of things, that has already been posted on the TL private feed. The discount code's there. Encourage you to take advantage of it. I think this is going to be, with the sessions that we've had and the planning that we've done with Jared, I think this is going to be almost equals to the Oliver Kell master class, but from a psychological or trading psychology perspective. So I highly encourage you guys to at least check out this master class with Jared Tendler, and then use discount code. I think it's TP something something. You could check the Twitter feed for that, but I highly encourage you to give it a shot, because we worked hard to sort of secure that pricing for members to sort of keep it fair and in that regard. When are you expecting DeepView to be out? End of April at this point. We're working to finalize the screener on the back end, and then we'll start sort of showing you guys some snippets of it, how it works, maybe get some beta testers in, things of that nature. But it will run its course. We're confident that we could get it at least a screener out by end of April as of today. So with that, I'll end it there. I hope you guys found this helpful. The recording will be up. Hopefully it recorded. If it didn't, we can do this again in 2 weeks. I don't mind talking about RS. It's fairly straightforward. The concept, the slides will be posted. The recording will be posted. If you have any follow-ups, post them in the comments on the website. And the next, we have a webinar on how to do a study a week from today. So watch for that link. It's already posted on the events dashboard. And I hope you guys found this helpful. Thanks.